Welcome to the weekly heads up for New Zealand business from DAA Business Consultants and Chartered Accountants.
Inland Revenue have a compliance program, and in their annual briefing to the Minister of Inland Revenue, they have been targeting the hidden economy in New Zealand. This hidden economy in New Zealand is costing approximately $7 billion in lost tax to the government. Just imagine what the government could do if they had that income. That's something to think about for another day anyway. Why we raise the issue of the hidden economy, or what is effectively cash jobs, wages on the table and the acts of crime, or the proceeds therefrom, is the fact that Inland Revenue have come out today and publicly released 16 industries of which they are benchmarking. These industries include cafes, restaurants, bars, painters and electricians, just to name a few. The reason why Inland Revenue have done this is to make the taxpayers aware that they are monitoring them, and in fact they have been for a considerable period of time, and that when you file your tax return, or we help you file your tax return, they match what is in that tax return against what the industry benchmark is. Now, if you've been banking cash payments, you'll have no issue. But if you've been taking the cash, put it in your back pocket and spend it elsewhere, you may actually fall into IRD's trap. This is because your figures, or part of them, such as the gross margin, may not match up with what they expect to see for the industry. If this is the case, you can expect, or it's highly likely that you will expect, that Inland Revenue will come knocking and ask some serious questions. Why not? Now, the fact that you don't match up on their benchmark is not necessarily an indicator to them that you are taking cash jobs or not banking the cash. It could just simply be that you're not running your business as well as you should be. And if you're not within the industry benchmarks, perhaps you should come and talk to us here at a DAA about how you can help lift the performance of your business. Now, if IRD do come looking, and you have been taking cash payments, and you've been caught by them, you can expect them to come down heavily. And quite frankly, I think they should. You haven't been complying with the tax law. The tax law is pretty straightforward, and it says if you receive income, it is taxable. To try and hide it means that you should actually pay the price. The penalties could range between 25 to 100%, who knows? It just depends on the level of cash that you take. If you take $100,000 out of your business during the year, you can expect IRD to take a very dim view, and in fact they could even consider taking to the extreme and do prosecutions against you. We do not want to see anyone in that position. We have for some time, and even in our recent newsletter, we actually said that if you are taking cash payments, you should be banking them into your bank account. It is one of the rules that we tell every new business when they first sign on with us. The reason for this is, by putting it in your bank account, you're showing IRD that you're in full compliance with the law, you have nothing to hide, and that if they want to have a look at your books, go for it. If you are taking cash payments and you put them in your back pocket, then you should be keeping a record of what you're actually taking. The first thing to consider is that every time you take cash, you've actually got to declare GST on it, and so you should be adjusting for it in your GST returns. If you are taking cash, are you doing this? If not, have a think about what that means in terms of the underpaid GST and the fact that it could be viewed as you stealing money from the government. The second element is that income tax must be paid on the cash that is actually put in your back pocket. So as we do as part of our annual checklist, we always put in a section where you can tick a box and say, yes, I've been taking cash payments, and you put down the level of cash that you're taking. By doing that, you're now complying with the law because you're saying, yep, up front, I took the cash, I'm going to pay the tax on it, fair enough. If you're one of those people that think you're being clever, just like your neighbour down the road, that you're putting the cash in your back pocket, telling no one, well, with these new benchmarks that have been released by Inland Revenue, you may be caught by them. While they've only released 16 now, there is actually another 34 that we know of that will be released during the next year. That gives us a total of 50 industries of which they are closely benchmarking. It will be interesting to see how they use these benchmarks going forward, and in fact we will actually be doing it in-house ourselves, comparing our clients against the IRD ones, just as a matter of interest. And those clients that are under it, we might ask them the question as to whether they need assistance to help lift their business or if there is something else going on. The key message is, though, if you're banking cash, you have no problem. If you're taking cash, put it in your back pocket, telling no one and thinking you're being clever, you can expect to be caught by Inland Revenue at some point in the future if you're outside their benchmarks.